the downgrade itself should have happened a while ago, and it really isn't much of a driver of anything in the market. I think if the downgrade had come when S&P 500 was at, let's say, 5,400 or 5,600, I don't think we'll be talking about in terms of impacting equities and risk assets very much.
But Krishna, as you know, it's coming after a big conversation through much of April about the future of the safe haven status of the United States following a big policy shock on the trade front. And that's raising questions about the future of a tax bill advancing down in Washington, D.C., and what it means for fixed income going forward from here. What do you think it does mean?
Well, so I think the real issue for the economy right now is, as Yelena was talking about, is really the slowdown and the tax bill. But it isn't tariffs, and it isn't really the impact of the fiscal deficit that much on the state of the economy, or even the dollar for that much. So I think what we are talking about here is the tariff situation will get resolved. The tax bill probably gets passed, but with lower level of fiscal expansion in 26, 27 than what we are expecting right now. That's really not a bad environment for bonds. And especially in the light of the fact that inflation is really not going to be that big a deal. It's, tariffs impact in price levels, but it's really not as inflationary as people are thinking in terms of. It's a consumption tax rather than inflationary. So if that is the case, inflation is not a big deal, and real rates are high, and you end up with a tax package that is more reasonable rather than meaningfully expansionary. I think that's not too bad for the bond market.
So Krishna, are you buying 30-year bonds?
Well, so, in our allocation, for example, for an endowment, for example, what we are focused on is really the long-term return of equities and private equities in particular. So bonds, bonds are interesting, but we can generate bond-type returns out of low-vol hedge funds just as much. So no, we are not buying it. In my private portfolio, yes.
Okay, so here's my question, Krishna. Why does it not concern you at all that we have a toxic brew right now, where you have bonds selling off, stocks selling off, and the dollar selling off in tandem at a time where people are making a lot of noise about the fiscal deficit?
Well, so I would say that you have to put it in a bit of a context. That is, all of this is happening after a significant rally on all of those things over the last month and a half. So, we are taking profits rather than rethinking the basic strategy here.
Krishna, when you talk about in your notes that you don't foresee a recession but a slowdown, what would make you reconsider that actually the U.S. could tip into a recession?
Well, if the tax bill doesn't pass and tariffs get implemented, that's a fiscal consolidation for the history book. So I think that really would get us into a recession. If we have a reasonable tax package, and the fiscal consolidation is, or there isn't as much fiscal expansion, I don't think we get a recession.